if you surround yourself with the right people that are further ahead in life than you and have more experience and wisdom, that's really what helped open my eyes to there's another way to do this that gets me off that hamster wheel and takes a skill set and a business that I know how to do and that I have a real advantage at. And now, other people are willing to pay for us to execute that same strategy that I've been doing for the last 10 years.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I'm your host, as always, Yonah Weiss. I'm really excited to have today Terrance Doyle, otherwise known as the Value Add Dad. What's going on, Terrance?
Yonah, I'm super well. Thanks for having me. Really excited to be here. And I miss seeing you. I think I just met you for the first time last week, but I already miss you. So glad that we were able to reconnect so quickly.
And that's awesome. I do too. The feelings are totally mutual. We had such a good time. Terrance and I just spent the day together last week in Denver. And those videos on the Bigger Pockets Multifamily Mentors podcast is going to be airing sometime, maybe around the same time this will be. If it is, we'll make sure to put a link there. But otherwise, you guys should go check out that podcast, one of the best podcasts out there, and on YouTube and every other platform. Just going to give you guys a little bit of background about Terrance. He's the co-founder of the VareCo. Okay, so the VareCo, we're going to get into this. So I love the name, but we're going to talk about what you guys do. I mean, you guys have currently over 100 million assets, probably more than that by now. I know you just closed on a big deal a couple of weeks ago, $64 million. So we're definitely pushing that and going up both in Des Moines, Iowa, as well as the Denver market. So I'm really excited to learn more about your journey and learn about what you got going on from now. So Terrance, tell me a little bit about how you started the VareCo.
How I started the VareCo.
And what does that even mean?
Value add real estate company. It was pretty simple. I just thought about what I enjoy and what we do best. And it was buying true value add properties. And I think value add, you probably hear it. I mean, everyone throws around that term very loosely. And I just wanted to kind of put a stake in the ground that we do true value add deals. And that's how we describe ourselves to lenders, investors, and our audience.
So value add can mean a lot of different things, right? Obviously, there are many ways to add value. I mean, you got a big cap, right, that says value. Right. I got one too. I probably should have brought it for this episode, but you're adding value in so many different ways. But tell me, like in a nutshell, like what are your favorite ways to add value when you're talking about adding value specifically in the real estate?
Yeah. So phenomenal question. The way that I look at it personally, is from, I try and from the entire process of just sourcing deals, right? So if you think about a broker, right? If I put myself in a broker's shoes, what are they looking for? And what's going to add value to their career and their life is really convenient, quick decisions and closings, right? So when we look at a deal or someone sends us a deal that's in our network, we're trying to have comments or questions back within 24 hours. And when we decide to do a deal, we are trying to make it as convenient and smooth and fast as we can. And that's how we would say we add value to a broker, right? So when I'm sitting down with brokers, I'm like, look, here's the track record. Here's what we've done. Here's our buy box, being very specific, very intentional, and it's programmatic, right? I'm not guessing. I'm not any loose with any terms. We know exactly what we're looking for. And so from a broker's perspective, from the very top of the food chain, to a lender, right? We have lenders already picked out. They have our financials. They know the kind of deals we're going to do. We already pretty much have a term sheet that we've kind of loosely agreed to in terms of, how much leverage, what construction looks like, how the drop process works. And so from a lending perspective, that's how we're able to add value to lenders, right? And then to our investors, to our LPs, we're able to add value because we only do deals in the markets where we feel like and we know that we have a competitive advantage, right? So I'm not going out and trying to be, the first deal that I've done, let's say in another market, that in my opinion wouldn't be adding value to my LPs. So I'm able to add value to LPs by sourcing deals in markets where we have a real advantage, where we have a track record, and where we are vertically integrated with construction and property management. And so when it comes to the property, how do we add value to the property? We do it through two ways, construction and property management. And I started, I speak fluent Spanish. I was fortunate enough to be raised and spend a lot of my childhood in Colombia, South America. And so that taught me Spanish as well as just what it looks like to be around poverty and to be raised where there's not as much opportunity. So that's given me just a perspective of empathy, of gratitude, and just really every day just feeling so thankful that we live in a country where, if I have an idea, I can call somebody and in, a couple of hours, we can have a business up and running and be making money, and that's most people in this country take that for granted. But that's really special to our country. And so those are, I hope that helps the audience give a little overview on how we look at value. And it's really, I think the punchline of it is we're trying to give more than we receive is our definition of value. And we just try and do that throughout the entire process of the multifamily experience.
100%. There are so many, like you said, there's so many different ways to add value. And when you're doing that in, not just in your real estate investing, to every relationship, every interaction that you have going on. You're talking about adding value to the brokers you're interacting with, right? Adding value to the lenders, adding value to your investors, adding value to the tenants in your communities that you're building and recreating really is what you're doing. Some of these properties are really old. They haven't been updated in forever, and you're really giving a new feel. So it really changes the sense of community to the actual property and the tenants.
Absolutely. Yeah.
But you're not just doing, just your standard value add, which is what I was trying to pull out in terms of and the word standard probably isn't the best word, but there's so many people out there. I'm doing value add, real estate, multifamily syndication, which means you just buy a property, you upgrade some units, you add some, take away some of the deferred maintenance and all kinds of things like that. But really in the end of the day, what are you doing to add, tremendous value? And you're doing some things that are kind of out of the box. If you take the property where your office is located in, for example, the office that you bought this vacant or, totally undervalued property and just turned it into a beautiful workspace. I love it. Tell us about that experience.
Yeah, that is a unique place. I think for several years in Denver, some other investors and brokers and just people in our ecosystem, we had talked about, man, what would it be like to have a space where people, throughout the entire process of a deal or residential, commercial, or, all kinds of people that just love real estate, love collaboration, have good energy, want to listen to cool music, and kind of think of like an industrial WeWork space, but just for real estate. And, so we were fortunate enough, downtown Denver and most metro cities, large cities, downtowns got hit pretty hard over the last year with COVID. And there was a gymnasium that went out of business in an industrial building near downtown Denver in an area that we knew pretty well. And so we were able to pick up the building at a pretty low basis, because the gym had gone out of business and the owner needed to get out of it because he was, paying his mortgage every month and didn't have rent coming in. And, we were able to recreate the space and put offices there, put a kitchen, put different phone booths so people could have, conference calls in private. We have some open co-working, where people, that don't even work for our company can just come in and work for the day. And then we have a, conference room. And then in the back, we have an area where we can store materials, for our projects so we can buy them in bulk. And, it's an awesome space. I'm really fortunate. We have some really great people. And, I think the common theme, when outsiders come in is they're just like, man, this is a really unique feeling in here. Everybody's working, they're collaborating, there's music playing, there's snacks, there's food. It's just we created a space where I felt like I could be the most productive and had really good energy, and that hopefully other people, feel the same way. And, we've tried to take that same idea and, we try and implement that in the communities that we purchase and that we own and manage, and just trying to make places that are more comfortable, that are cleaner, that are safer, and just an upgraded living experience from what typical Class C or B buildings look like around the country. And if that means, adding shiplap or adding a, more custom, exterior to the building, changing the way entrances and hallways, changing the way places smell. I think one of the, things that our team thinks about is, when you go to a spa, there's a certain kind of smell that you have that really sticks with you even after you leave. And it makes you feel relaxed and it makes you feel like good about yourself, and kind of your soul, gets refreshed. And so that's definitely what we're trying to recreate in our buildings. We want people to feel like they're home. They want them to feel refreshed. We want them to have like really positive energy. And so we do that through the colors that we use, the flooring, the smells that we try and, put into places. that people are going to move into. And those are some of the ways that I think we separate ourselves and that we think about, multifamily. It's just, we're creating homes where people are going to live, and we want those people to take pride in that, to feel comfortable there, and to really enjoy it enough to where they hopefully don't want to leave for a really long time.
Right. Because obviously that's your biggest asset, is having those tenants stay for a long time, right? You want to make sure that they feel it's a place of community. They feel it's a place where they can feel like home and want to be there, and make it a place where they want to tell their friends, right? Hey, this is a great place to live. This is a great community to be in.
Absolutely.
Doing that one tenant at a time or on a large scale is great. Obviously, the larger properties you have, the easier that is to do, because you have obviously a much bigger tenant base to work with. But you've done anywhere from 3 plexes, 4 plexes, 10 plexes, everything in between, up to what we're talking about, this 267 units that you just purchased in Denver. These are there's so many different ways that people can make money in real estate, and I think you've tried out a bunch of them, right? And stuck with what you're doing right now, which is this syndication model, where you're adding value. Is that, the best for you? Was it always that way, or did at a certain point kind of pivot to change in this direction? And if so, what was kind of that pivot?
Yeah. I started buying single family foreclosures at the public trustee sale, like in 2008, 2009 with a couple of buddies, and that was my first experience in real estate. You have to remember that, I come from a family where, in South America, it's much different to own real estate. My dad's from Canada, doesn't have a college degree, much different to own and be an investor in Canada. And so owning real estate was never in my family. That's not something we talked about or I was exposed to. And so my first exposure to real estate was, my former college teammate coming to me and saying, hey, we're going to start buying foreclosures at the public trustee sale. Would you invest? So that was my first experience in it. And I had no idea what a foreclosure was, what an auction was. I didn't know any of that. So, starting in 2008 through 2014, all I really thought about was as a transaction, right? Buying a property for X, putting in Y, and then selling it for Z, and doing that in a really short time frame, making really fast decisions. And then, in 2014, I started to look at the landscape and say, and we were doing hundreds of flips a year, right? And so even though the numbers looked big, it felt like a lot of work for maybe not as much of a return as you would hope. So in 2014, I started to think about, what if I took construction, something that we were comfortable with, and applied that to a different asset where I maybe wouldn't have to work as hard, and it would maybe pay me even after I finished the construction. And so, we looked at a bunch of different opportunities and really just landed with, hey, we already know what people like to live in, with kitchens and bathrooms and hallways and living rooms and, windows and entrances. And we kind of already were comfortable with that. So we thought that, a natural progression was just to take that to an apartment building. And I think for me, the tipping point was really understanding that apartments trade on a multiple of income. And the more, every $100 we could raise rent a month, that was worth a certain amount of money based on that multiple. And in Denver at the time, it was like a 6.5 cap back in 2014. It was every $100 worth about $20,000 of back end value. And so there was really, math is not really my strength, but that was simple enough math for me to do on the back of a napkin where, hey, I think I can raise rents $400, $400 at a 6 cap, roughly 20,000 a door, 20,000 every 100. That's $80,000 per door. Okay. I'm buying 10 doors. I should make somewhere between $700,000 and $800,000 when I'm done with this property. And so that was really the underwriting. And initially it was just me and my business partner who I went to college with. And him and I were doing basically everything ourselves. We'd have private money. We had our own capital. We had obviously bank financing. And we were just trying to buy as many of these deals that we could find in Denver and Des Moines in neighborhoods that we really knew. And how quickly could we renovate, restabilize the property, put new tenants in, and then sell those properties and then take that money and turn it and do it again. Right. So like you said, I started, duplexes, 4plexes, 8plexes, 10-unit buildings. And the light bulb went off when we bought our first 100-unit building probably in 2016 or 17 in Des Moines. And when I saw the power of having 100 units that we had, renovated and were paying an extra $150 a month and our debt was fixed. I mean, that was like a real business, and that was really life changing, of having 20 to 30,000 a month of pure cash flow, positive cash flow after paying all the expenses and the debt. I mean, that's like, that was a real turning point, I think, of seeing the power of that. And then that started me on this journey of trying to buy as large a properties as I could that still fit the box of true value add, where we could come into a property and renovate, raise rents, re-tenant the property, change the living experience, and fix it with low, really, low debt and lower expenses through some of the systems and processes we implemented on the property management side. And so, that's kind of the evolution, and I'm still in that journey. I think, a couple of years ago, I switched from just using my own capital to, raising outside capital in a structure with GP and LPs. And then last year, we raised a fund so that we had programmatic capital. So, I had a pool of money sitting there that I could call on to go and do deals that fit our box. And that was, a new experience for me. I've never just had money sitting there from other people that were ready to go and acquire properties in these two markets. And so, yeah, I still feel like we're really early on with, being more fiduciaries and looking at it from from investing our own capital alongside some other strategic investors' capital. And, so I'm enjoying that process. We're learning a ton. And, so we're still, I feel like just scratching the surface of where we're headed and what we're trying to achieve in this space.
That's awesome. There's so many different ways, that you've kind of experienced. And I love the fact that you talked about the transactional real estate versus
right.
which I think a lot of people who start in real estate start out that way, meaning they're starting out doing fix and flips or wholesaling or doing these buy and sell or even brokers, and you kind of get used to trading your time for money. And it's not really any different than any other type of job, except for the fact that it is real estate, and you are able to actually make a lot more money sometimes with real estate than other types of transactions, because that must be a very expensive type of asset. So if you're buying and selling something, you're going to be proportionally making a lot more than you would if you're flipping couches or or any other type of sneakers, right, exactly, any type of the product. But at a certain point, you kind of switch and realize, okay, how can you scale this? How can you grow this to well beyond just time? And I think that's really where value comes in, because you're adding value, not just adding time, not just trading your time, you're actually trading your value. And so you're adding so much value, and that is exponential. I mean, the amount of money that people pay for value is, you can't really put a price on it. And so I think that's really where a lot of people get stuck, especially in real estate. They just keep trading their time for money. They keep doing transactions. And, at a certain point, you just got to realize, I got to get out of this. I got to figure out a way that I can add a tremendous amount of value. And then I can, then that would be an opportunity to kind of burst out of that.
Yeah, it's, you just get stuck on that proverbial, hamster wheel where you're just, you just have to run faster to make more money, as you have family, you have babies and you need a bigger house and car. And then you're just like, okay, I got to run faster. And, one of the key things for me is, I think, the name of the show, Multifamily Mentors, that Chris and I do on Bigger Pockets YouTube is, just thinking about, if you surround yourself with the right people that are further ahead in life than you and have more experience and wisdom, that's really what helped open my eyes to, there's another way to do this that gets me off that hamster wheel and takes a skill set and a business that I know how to do and that I have a real advantage at. And now, other people are willing to pay for us to execute that same strategy that I've been doing for the last 10 years. And that's what they're looking for, right? They're looking for risk adjusted cash flow and upside in markets that they feel really comfortable in and confident about long term. And, so you talk about adding value, when it comes to, raising capital or even looking for lenders, that's what people are looking for is, hey, who can I trust so they can be passive for them, right? So that's adding value to them, is they're going to continue to do what they're doing full time and they're expecting a return, and everyone's looking, especially right now with where interest rates are at, to find real passive cash flow is very difficult in this market. Just to give you an example, like there's so much cash in the system, right? And, my wife and I lease our vehicles, and typically in the past, we get a discount if you pay the lease up front, right? Because I don't want to have maintenance issues and I don't want to have to pay to get an engine fixed or anything like that. So typically, you can pay up front and get a 10 to 15 or 20% discount depending on, the year and where interest rates are at and that. But just to give you an example of just how much cash is out there is, I was talking to the dealership and I was like, all right, well, we'd like to pay it all up once. And he said, actually, we're discouraging that currently. We're not looking for upfront payments. There's no discount and we're actually not even looking for that. And so for a dealership or any business to say, we don't want the upfront money, we'd rather you pay it, over time, and we're actually going to give you the same deal to make a monthly payment versus give us all the cash up front is unheard of. But that's really the environment we're in, is that there's cash everywhere. Everybody has money laying around for whatever reason, because of what we've been through. And there's so much money in the system that, people are looking for ways to grow their passive income, but they're really not looking for ways to have more cash. There's plenty of cash. And so understanding the economic environment that we're in and then being able to solve for what the problem that people have has been something that, just surrounding myself with the right people, and this was several years ago that this started, of just saying, hey, I think if you can, in a risk adjusted way, show people that you can really do that at scale, you're going to be able to set yourself apart from a lot of other people that are maybe just transactional. And that's that's the environment we're in. So that's what we're solving for. And that's what we're trying to offer, to our partners.
Yeah. It's important, obviously, to roll with the times and realize what the current environment is offering and what you can give, depending on the situation that we're in. And things have changed pretty rapidly over the past few years. So you have to change. You have to keep evolving. And I think that's really the theme, right? Value is relative to, where you are, what you are. I mean, you talked about, you knew what the tenants liked in terms of the bath, the countertops and the vanity and the floor. You knew what people wanted in a unit. But I'm sure that's changed over time. And I think that is, something that's constantly changing, right? The new tile is coming out, or the new, light fixtures, right? LED is now very popular. They didn't have that, 5-10 years ago. And so these are different ways that you kind of have to strategize and realize you can add value in so many different ways. But you got to keep adapting, because there's going to be new opportunities, new ways to cut down costs, new ways to, find a value add. And just give a perfect example, cost segregation, right? That's just like something that is just mind blowing to a lot of people who never heard about it, never used it before.
Yeah, shout out to Keith Wasserman. I think you and I were talking about his quote, bonus depreciation is the 10th wonder of the world. And, you're absolutely right. I think I'd been following you for a while on LinkedIn. I had done cost segregation in the past on some of the properties I owned in Iowa, but previously I was under the assumption that you could only do it after you finish renovation, that you could depreciate the construction improvements. And this year, we learned, and you were a major, advocate for this and helping me realize this, is on the acquisition, you can depreciate up to 20, 25, percent of the acquisition price, based on 5-year, 15-year, and 27.5-year property that you, taught me during our show last week, which people should, tune in to see, because you gave a tremendous, lesson there on site here in Denver. But yeah, it's fascinating. I mean, that's the wonderful thing about real estate, is that you're always learning. You've never arrived. And, by networking and using social media, which you've done extremely well, you can find ways to add value to yourself and your partners, by using things like depreciation, bonus depreciation. And, I'm really excited to be able to offer that to our partners this year. We've purchased a lot of property, probably over 100 million just this year. And we're going to be able to pass that on to our partners, and they're going to be able to, have a massive depreciation this year, because of that. And we're really excited.
Yeah, it is really exciting, especially when you see those tax returns, you're like, wait a second, I don't pay any income tax this year, like whatsoever. Right. And you're making 7 figures. You're like, okay, that's a good deal. Right?
It's a good trade. I'll take that trade.
It's a good deal. You talk about adding value so much. We're talking about social media. We did a little powwow, last week, with you talking about social media and talking about Gary Vaynerchuk. So shout out to that. Everyone check out that episode. But I'd love to hear just your take on this, because you are someone who, you have a team, right? And your team helps a lot with, everything. There's the CEO of a company, right? You got a lot of people doing different things, but specifically when it comes to social media, you have a team, helping you create content, put out the content. Is there any, advice you would give for someone who's kind of, maybe they don't have a whole team yet, or maybe they just have an assistant or something like that? Like, what are the key things that you would offload, when you're trying to still add value, but you want to make sure that you're not being undertaken by the plague of just spending too much time?
Totally. Yeah. Gary V, has been a big influence. I've been watching him maybe for 5 or 6 years, and I know you have studied him as well. And he's had a big impact on how you've crafted your business on social media and been able to create an amazing funnel and just web of relationships of people you haven't even sometimes met. But, I think just being self-aware, I think one of my strengths, a long time ago was just realizing, hey, there's 2 or 3 things that I do better than maybe most, and I'm going to focus on those 2 or 3 things. And then there's other people that do other things extremely well that I'm not strong in. And so just finding ways to align interests with people that are strong in other areas. Perfect example of that is Chris Lopez. I met him through Bigger Pockets maybe 5 years ago. I saw that he posted something about marketing and podcasting. And this was like 2016 or 17. So before like this crazy wave of everybody having their own podcast. And I was just genuinely interested in learning about that, and clearly he was a thought leader in the space, had built multiple businesses using, social media and podcast, and had, marketing funnels and done all these things that I had no idea about. And so, we just started out as a conversation, and it was very organic. And now it's, grown into, he has a social media team. He does a lot of podcasts, and I've been able to, partner and align interests to where we've done, a lot of great things together, from his local podcast in Denver to, our national show with Bigger Pockets. And, like you said, we have an amazing team, with Jules and Diana and some other people that we're hiring. And it takes so many people to do what we're doing, right? There's, 5 people in the room, and you and I are sitting here talking, and a lot more people are going to be able to, listen to it and enjoy it. And just realizing that it's not the best use of my time, but if I can partner with other people that are really good, and that is their highest use of their time, and that is their strength, and finding ways to align interest and to add mutual value, that's kind of been the way that I've looked at social media and podcasting, and really just business in general is, let me take what I do really well and complement it with what other people do well to reach a common goal. And, I think that's how you and I met. And that's how I've been able to grow my business and be able to do, and meet a lot of amazing people through social media.
Yeah, that's a great breakdown. I think you're absolutely right about the self-awareness part also, right? You can't really grow in any way whatsoever if you're not self-aware. And I think that's something we all struggle with on many different levels. But those of us who take the time and energy to, self-introspect and figure out how you can grow, both in business and in life and spirituality, whatever it is.
That's right.
You'll find yourself just going way beyond what you ever dreamed of, right? If you don't hit an endpoint, you don't ever have, and some people talk about, I want to have $1 billion under assets, under management, and I want to have this many doors and things like that. But if you don't really set an end goal, you're just like, I'm just going in this direction, and I'm maximizing, I'm adding value, and I'm maximizing my potential and of those around me, then the sky's the limit, really. I mean, it's a cliche, but it's so true, because you're not limiting yourself to say, $1 billion under management. Brandon Turner had a post last week on social media where he set a goal for, to have $50 million of assets under management by the end of next year. And this week he's closing on a $70 million deal, one deal, right?
Crazy.
It's like, when you limit yourself, and sometimes that may seem like way beyond your imagination, but it's still a limit, right?
Right. Yeah.
There's infinite potential.
Totally.
I'd love to transition now to what we call the final 4. So these are 4 questions we'll ask all my guests. And the first question, Terrance Doyle, what's the worst job that you ever had?
So one of my weaknesses is that I haven't had a lot of jobs. I've never actually really worked for anybody, but in high school, I played basketball. I played on a pretty good team. We didn't lose a lot of games, but one year we lost early in the state tournament. And my parents told me, well, since you lost, you're going to have to go get a job before, summer basketball tournaments and camps had started. So I worked at McDonald's for like 8 weeks in high school, and it was a very painful experience. I worked there with my best friend who was also on my team, and his parents kind of punished him the same way. And so I did work at McDonald's in high school. I think I was 15 or 16, and it was a great experience. Met a lot of great people. I mean, it was fascinating to look kind of behind the curtain, if you will, of what it looks like to flip hamburgers and run a drive-through. But that's pretty much the only real job I've had for somebody else. I mowed lawns, in high school and college with my dad, and then I started a company in college. And so I've kind of been, I guess that's been one of my weaknesses when I'm hiring people is I don't really know what it's like to work for other people. But I've been an entrepreneur most of my life. But yeah, that's probably one of the, I guess that's one of the only jobs I've had. So I guess that's the
that'll check the box, right?
Yeah,
that's interesting punishment, though. You look at it like that, right?
Yeah, my parents were, they were swift with it too. They're like, all right, you lost. You need to go get a job. You're not standing around the house for 8 weeks, twiddling your thumbs, go get a job. So yeah, it was good. I mean, it was, I'm actually very thankful because it showed me that I needed to apply myself and didn't want to end up there after college. So that was good. It was a good wake up call.
That's for sure true. Yeah, that's a big wake up call. You don't want to spend your time flipping burgers. What's a book you've read that's given you a paradigm shift?
So there's two books that come to mind on entrepreneurship that I really like. One of them is the autobiography of Steve Jobs. And one of the things that sticks out there is he talks about when he was having hard conversations that he would take walks, with people, either Steve Wozniak or whenever he was he was doing the deal with Disney, and, he was with the CEO at the time or the chairman of the board, and they were they walked for like miles and miles. And he talked about how in difficult conversations when you're negotiating or having, just discussing things where people could have the tendency to get heated, when you're taking a walk, it's harder to get upset. So that's really stuck out to me. So whenever I have a difficult conversation, I try and walk as much as I can. And that's been great. The other thing he talked about that left a lasting impression is he wore the same thing basically every day. And just taking off like what you're going to wear on your mental desk, just allowed him to start the day with a clean slate. And so I've taken both of those things and tried to apply them. The other one is Shoe Dog, and that's the story of Nike. And it's an amazing story on Phil Knight of, how he built the shoe company and, his background. And one of the things that stuck out to me is that he was always doubling down. He would order, let's say 500,000 pairs of shoes to go make shoes. And then he would deplete his entire bank account until he sold them. And then he would go, take out $1 million line of credit and he was just constantly doubling down pretty much until the day that Nike went public, is that he was constantly betting on himself. And, just his story of perseverance, persistence, and betting on yourself really stuck out to me. I also love at the end of that book that he's looking back on all of his experiences, with some of the best athletes to ever live, Michael Jordan, Tiger Woods, LeBron James, all these guys that he's had the chance to interact with. And he's talking about just different things that stuck out from each one. And, potentially no one's had more influence on sports in our world as we know it than Phil Knight. And so that's an amazing story, especially for someone that loves sports as much as me. I highly recommend both of those books. They're great stories of entrepreneurship.
Awesome. Yeah, both incredible books. And I love the idea of the taking the walk with Steve Jobs, because that really stands out to me. And I've experienced that personally and feel the same way. It's excellent advice. I mean, it's just phenomenal.
It's easy to apply and you'll see a difference right away. It's very hard to get angry or aggressive when you're walking. So I thought it was, a phenomenal tip from one of the most successful entrepreneurs of all time.
Absolutely. And besides that, I mean, even without that component, it just takes you kind of out of your standard environment sometimes and just allows you to think out of the box, think about things that you wouldn't have necessarily come to because you're kind of focused on, in the midst of whatever it is that you're doing and in the environment that you're used to, your mind can't necessarily open up to certain things. So the third question, and we'll put both of those books in the show notes. So if anyone wants to check those out, you can look in the notes. And the third question is going to be, what is a skill or talent that you would like to learn?
Well, my wife tells me that I'm not very funny. So I think being better at telling stories and, like being a stand-up comedian would be like a great skill to have. I think that humor is a great way to build relationships and to, I think when people laugh, it's one of those things where they're naturally drawn to people that make them laugh and make them, you kind of feel good. And so I would say, just if I had like a split personality of Kevin Hart or something like that would be amazing to have that kind of, if you could just turn it on and like make people laugh and at a party or something, be able to tell a joke that everyone would laugh at. That would be a great skill to have, I think.
That's great. Yeah. It is a skill. I think there's talent to it, but I think it's something that can be learned. And totally. We've actually mentioned on this podcast before a great book called by Michael Port called Steal the Show, which is one of probably the best book I've ever come across on public speaking. And he's he was an actor and public speaker, one of the most sought after public speakers out there. And he talks about improv all the time. He talks about like the importance of just practicing improv because it's a skill that actually helps you in everyday negotiations and relationships and conversations, as well as public speaking. But he kind of brings it down to talking about everything. And I've learned a lot from that. And I love improv. It just helps your mind like think on the spot,
totally.
Because I think humor is all about the timing, right?
Right.
Like, that old joke, like, it says like, what's the most important thing about humor is time. Ask me, what's the most important thing about humor?
What's the most important thing
timing,
about humor?
Of course. No. So it's all in the timing.
Yeah, that's right. But, a great lesson in timing right there. People should rewind that to understand how important timing is.
Fourth and final question. What does success mean to you?
I think success is maximizing your potential. On our wall in the office, it just says maximize your potential. And everyone's been given, in my belief, everyone's been given a certain set of skills and talents, and it's up to us to maximize them. And if over the course of your career, you can look back and say, I got every ounce of production I could out of what I was given, I think that's success. That's a part of success that I think most people don't realize. Instead of trying to be someone else or envy other people or look at other people and wish you had that or that, anything along those lines, if you just look at yourself every day and say, did I do the best I could possibly do with what I've been given? The resources, the talents, the time, the opportunities. We've all been given so much. And I think when we start to look at ourselves instead of like other people, I think it really changes our gratitude, our energy, our attitude. And I think that can, in and of itself, like completely change the outcome if you look at things that way. So I think maximizing your potential is one of my favorite things to tell people about success.
Love it. Love it. I totally agree. That's one of the best explanations out there. Because it's looking out on a micro, right? It's looking at it on a daily basis. It's looking at it in every aspect, not on a macro. And of, like you're saying, think about someone else or no, you're not going to be judged or by anyone except yourself, and to realize how you can make the maximum potential from what you were given and the gifts you were given and the talents you have. So love that. Appreciate that. Terrance, where can our listeners find you or reach out to you?
Yeah. So Chris and I are launching a show. It's season 2 with Bigger Pockets on YouTube. It's called Multifamily Mentors. That's going to be launching the second week of November on the Bigger Pockets YouTube channel. You have 2 episodes on the show, one in our studio, the other one on a property. And, I'm super excited for people to see that because I learned a ton about cost seg, just you and I walking it. And I'm excited for everybody that's listening and on social media to be able to experience and learn the same thing. So, Bigger Pockets YouTube. My Instagram is @Terrance Doyle. And then our website is VareCo.com, www.thevareco.com. And, if you follow me on Instagram or LinkedIn, my email's there. You can DM me. My cell phone's on Instagram. I'm pretty easy to reach if someone's looking for me. And I would say those are the best ways to find me.
Awesome. Tremendous. This has been awesome. Time flew by, even though we went overtime, as we often do. But this has been awesome. I appreciate you. And I feel like we just saw each other. We did, but I feel like we need to do it more often because that was a lot of fun.
We definitely need to do it more often, for sure. Let's make that happen.
So we'll definitely put that in the plans. But Terrance, thank you so much again. And I appreciate you coming on the show. And to our listeners, remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.